A major question everybody has is what has happened to rates and why have they gone up? Hi, it's Paul Walton with Cherry Creek Mortgage Company. Let's dive into it and see if we can add a little bit of clarity. The height of the market was pretty much November 4th. We closed at 103.81, and Friday we closed at 98.03. The higher the bond market is, the lower the rates are, so the lower the bond market is equals the higher the rates are. As you can see, we've lost quite a bit of ground. We have several factors that are contributing to the drop in the bond market. Investors have gone back to Wall Street to enjoy the rallies that we've seen there, the equities market, and we also have the Fed in purchasing Treasuries, which has thrown the markets three-way sideways. We are in unprecedented times at this point, and even though everybody jumped on the bandwagon to jump into equities and or the stock market, we will see a correction at some point in time. Comparing this to last year, which is probably about the best way to compare, this is when investors were pressuring the Fed to step up their purchases of mortgage-backed securities. So we closed pretty much at right around par at about 100, and then dropped down to a low of 93. It took about a month, if you look at the time frame, June 10th until July 8th, to actually see about a 50% correction, and then after that very choppy trading up and down until pretty much October 2nd to get back to where we were actually trading, equaling lower rates. And then about the height of the market was Thanksgiving week last year, and then the markets deteriorated, came back up to about a 50% correction, choppy trading after that, dropped down, and then we saw this massive rally up, which has brought probably the lowest rates we've seen in many years. So with the Fed in buying Treasuries, investors going into Wall Street and the equities market, that's what's caused the pull out of the bond market. Some think it's oversold, but as soon as the equities market and or Wall Street corrects, which is probably coming around the corner, you'll see investors come back to the safety of bonds. We should see a correction back up to about this 100 level here, which is at about 50%. So a quick inside view. This was Friday's candlestick or trading. We actually regained ground. We lost a lot of ground on Thursday, a lot of ground on Wednesday. The red candlesticks show we opened here and closed down here. Green candlesticks mean we opened here and then closed up. So the higher the bond market is, the lower that rates actually go. So hopefully this is signifying that we're going to start to bounce back up, but do not try to second guess the market because we're going to need to see a pattern moving north without a drop to actually see that recovery happen. But that was a very positive day, so until we can again see more movement north, we're going to have to be very cautious. To clarify how choppy the market actually is, this is trading on Friday, and the red line shows where we opened, and anything above it is positive for rates, remember. So the higher the bond market is, the lower the rates are, and anything below it means that we're losing ground and rates are actually going up. We drew below it briefly, had a good reprice for the better at around 940, and then the height of the market was pretty much at about 1140. Best time to lock would have been about 12 o'clock on yesterday, today being Saturday. Let's go back to Tuesday to show how choppy the markets have been, and keep in mind anything below the red line, rates are going up, anything above it, rates are going down. And you can see how many reprices for the worse we actually had, with one reprice for the better, and then finishing low. The markets have been extremely choppy. We can go back even to Monday, and the key is going to be to grab it on a rally. Don't try to second guess the markets, because if we see another drop like we have seen Wednesday or Thursday, and not seeing support to back, you could be pretty much floating your way out of your new home purchase. So don't second guess the markets. If you're looking to refinance, you may want to float. That's up to you completely. We should see a correction back up to about par. Hopefully this helps. Just keep an eye on Wall Street and those in the equities market. As soon as that starts to correct, we should see them jumping back into bonds, which will help us move back north again. On that note, have a fantastic weekend. I will be back to you on Monday morning.